Are you ready for what could be the most volatile Monday in stock market history? Because right now, as I'm recording this, multiple crisis factors are converging that could send the S&P 500, Nasdaq, and Dow Jones into complete free fall when markets open Monday morning. What's up, everyone? Welcome back to the channel. If you're new here, I'm your host covering the biggest market stories that actually matter to your money. And today, we need to talk about something that's got Wall Street insiders genuinely worried: the perfect storm brewing for Monday's market open. Before we dive in, if you want to stay ahead of market crashes and protect your investments, make sure to hit that subscribe button and ring the notification bell. Trust me, you don't want to miss what's coming. So here's what's happening. According to the Times of India's market analysis, three major factors are colliding that could trigger a massive sell-off Monday: AI-driven recession fears, escalating US-Iran tensions affecting oil prices, and a potential collapse in tech stocks led by Nvidia. But that's just the beginning of this story. Let's start with the geopolitical powder keg. According to The Guardian's latest reporting, US-Israeli strikes on Iran are already sending shockwaves through global oil markets. Now, you might think oil prices going up is just an energy sector problem, but here's what most people don't understand. Oil price spikes historically trigger broader market crashes because they increase inflation expectations and squeeze corporate profit margins across every sector. CNN's analysis shows that even the threat of US attacks on Iran could drive oil prices through the roof. And it gets worse. The Financial Times reports that insurers are already canceling policies and raising prices for ships in the Gulf and Strait of Hormuz. This isn't just speculation anymore, folks. This is real economic impact happening right now. When shipping costs spike because of insurance premiums, that cost gets passed down to consumers through higher prices on everything from food to electronics. The market absolutely hates unexpected inflation shocks, and that's exactly what we're seeing develop over the weekend. But the oil crisis is just one piece of this puzzle. The second major threat comes from something that's been building for months: the AI bubble potentially bursting. According to NBC News reporting, AI-linked fears are roiling Wall Street after years of hype and astronomical gains. Here's what's really scary. Business Insider reports that smart economists and business leaders are reacting to a viral report warning of an AI-driven recession and stock crash. This isn't just random fear-mongering. These are serious analysts looking at real data and seeing warning signs everywhere. The report suggests that we could see blue-collar jobs getting wiped out by AI automation much faster than anyone expected. According to Business Insider's follow-up reporting, even blue-collar jobs that were supposed to be safe from automation are now at risk. When you have mass unemployment combined with an overvalued tech sector, that's historically been a recipe for major market corrections. And speaking of tech stocks, Nvidia, the poster child of the AI boom, is facing serious headwinds. The Times of India specifically mentions Nvidia stocks as one of the driving factors for potential Monday market chaos. Remember, Nvidia's market cap has been supporting much of the recent market gains. If it crashes, it could take the entire tech sector down with it. Now, let's talk about what the big money players are saying. JPMorgan CEO Jamie Dimon, and this guy literally runs the biggest bank in America, just issued a stark warning according to the Times of India. Dimon says AI and, quote, dumb things can trigger a 2008-like crisis. Listen to this. Dimon specifically warned that markets resemble pre-2008 conditions right now. He's citing risky behavior, elevated asset prices, and AI-driven disruption as major red flags. When Jamie Dimon talks, smart money listens. This guy successfully navigated his bank through the 2008 financial crisis, so when he's drawing parallels to that disaster, you better pay attention. Dimon says people are doing dumb things to make money right now. Sound familiar? That's exactly what we saw before the dot-com crash and the housing crisis. Excessive risk-taking, inflated valuations, and everyone thinking they're a genius because markets have been going up. But here's where it gets really interesting. While US markets are facing these massive headwinds, let's look at what happened in other markets for clues about Monday. According to the Times of India, Indian markets fell sharply on Friday, with the BSE Sensex dropping 961 points amid global worries and foreign outflows. Now, you might think that's bad news, but here's the twist. Gift Nifty jumped over the weekend on strong GDP data showing 7.8% growth. This suggests that while there's definitely global uncertainty, markets might be oversold, and could see some recovery if the fundamental economic data holds up. The question is, will US markets follow a similar pattern, or are our problems too severe for a quick bounce back? Let's talk about the crypto connection because Bitcoin is often seen as a leading indicator for risk on sentiment. According to CoinJournal, Bitcoin dropped to $62,800 as tariffs and ETF outflows pressure the crypto market. Analysts are saying $60,000 is a key level for bulls, but there's talk of Bitcoin potentially dropping to $50,000 amid a bear cross pattern. Now, you might be wondering why now? Why are the US and Israel escalating things to this level? The answer lies in something that happened 3 weeks ago that barely made headlines. The New York Times reported, buried on page 7, that Iranian forces had moved advanced missile systems to within striking distance of both Israeli cities and US military bases in the region. But more than that, according to satellite intelligence analyzed by the Institute for Strategic Studies, Iran was preparing to cross what military strategists call the point of no return. Let me explain what that means. Military analysts, according to a report published by Jane's Defense Weekly, believe that Iran was within 60 days of having the capability to simultaneously strike multiple targets across the region with precision-guided missiles. We're not talking about the crude rockets we've seen before. These are sophisticated weapon systems that could fundamentally change the balance of power in the Middle East. So how exactly are the US and Israel responding? This is where Operation Epic Fury gets really sophisticated. According to sources within the Pentagon cited by Defense News, the operation has 3 distinct phases. Phase 1 involved intelligence gathering and cyber warfare. Phase 2, which we're apparently in right now, focuses on targeted strikes against key infrastructure and personnel. Phase 3, which sources say is being held in reserve, would involve direct military confrontation. But here's what makes this different from previous military operations. According to the Financial Times, this isn't just about military targets. The US and Israel are also targeting Iran's economic infrastructure in ways that are designed to look like accidents or technical failures. Remember those power outages in Tehran last month, or the mechanical failure that shut down Iran's largest port for 3 days? Intelligence sources suggest these weren't coincidences. The economic warfare aspect of this is particularly fascinating. According to a detailed analysis published by Bloomberg, the US has been using what they call financial precision strikes against Iranian entities. These aren't broad sanctions that we've seen before. These are laser-targeted actions designed to disrupt specific operations while maintaining plausible deniability. For example, just last week, Reuters reported that 3 Iranian shipping companies suddenly found their insurance policies canceled due to routine risk assessments. But when you dig deeper, these weren't routine at all. These companies were specifically involved in transporting military equipment to Iranian proxy forces in Syria and Lebanon. The timing wasn't a coincidence. Now let's talk about Israel's role in all of this, because their part in Operation Epic Fury is probably the most controversial. According to sources cited in the Times of Israel, the Israeli Defense Forces have been given what they call expanded operational parameters for dealing with Iranian threats. In plain English, that means they've been given permission to act more aggressively than they have in decades. This expanded authority has manifested in several ways. First, according to military sources quoted in Haaretz, Israeli forces are now operating much deeper inside Syrian territory than they have since the 1970s. They're not just conducting airstrikes anymore, they're establishing what military analysts call persistent presence in areas where Iranian forces operate. Second, and this is really significant, the Jerusalem Post reported that Israel has been sharing intelligence with US forces at an unprecedented level. We're talking about real-time targeting information, communication intercepts, and even human intelligence assets on the ground inside Iran itself. But perhaps most importantly, according to a classified briefing leaked to the Washington Post, Israel has been given assurances that the United States will provide direct military support if Iran retaliates in a way that threatens Israeli population centers. That's a level of military commitment that goes far beyond the traditional US-Israeli security relationship. Now, you might be thinking this all sounds very aggressive, but what's Iran's response been? And this is where the story gets even more complex. According to intelligence assessments cited by the Associated Press, Iran's leadership is caught in what strategists call the escalation trap. They want to respond forcefully to show strength, but they know that any significant retaliation could trigger the third phase of Operation Epic Fury, which could involve direct US military action. So instead, according to sources within Iranian government circles quoted by the BBC, Iran is trying to fight back through proxy forces while maintaining plausible deniability. Those recent attacks on US bases in Iraq, according to Pentagon sources cited by ABC News, those were Iranian Revolutionary Guard operations disguised as militia actions. The drone attacks against Israeli settlements, according to Israeli intelligence sources quoted in the Jerusalem Post, those were launched from Iranian facilities in Syria using Iranian equipment, but carried out by Syrian and Lebanese operatives to maintain deniability. But here's where Iran may have made a critical miscalculation. According to a strategic analysis published by the Council on Foreign Relations, these proxy attacks are actually giving the US and Israel justification for escalating Operation Epic Fury. Each proxy attack is being used as evidence that Iran is an ongoing threat that requires more aggressive response. Let me share something that really puts this in perspective. According to data compiled by the Armed Conflict Location and Event Data Project, there have been more than 200 incidents involving Iranian forces or proxies in the past 90 days. But according to the same data, only about 30 of these made international news. The other 170 incidents were either classified or deliberately kept quiet to avoid public pressure for broader military action. This brings us to something that I think is really important to understand about Operation Epic Fury. According to sources within the State Department cited by Politico, this operation is designed to avoid the mistakes of previous Middle East interventions. Instead of large-scale invasions or occupation, the strategy is what military planners call death by a thousand cuts. The idea, according to a strategy paper leaked to Foreign Policy magazine, is to systematically degrade Iran's capabilities while avoiding the kind of dramatic escalation that would force other world powers to choose sides. It's a strategy that allows the US and Israel to achieve their objectives while minimizing the risk of broader regional war. But there are some serious risks to this approach. According to analysis published by the International Crisis Group, this kind of prolonged low-level conflict can sometimes spiral out of control in unexpected ways. History is full of examples where limited operations designed to avoid major wars actually ended up triggering them. Moreover, according to sources within European intelligence agencies cited by The Guardian, other regional powers are starting to take notice. Russia has reportedly moved additional naval assets to the Mediterranean, while China has increased its diplomatic engagement with Iran. Both countries see the US-Israeli operation as a potential threat to their own regional interests. So what does this mean for the immediate future? According to multiple intelligence sources cited by USA Today, we're likely to see an escalation in the coming weeks. Iranian forces are reportedly preparing what they call a decisive response to recent attacks, while US and Israeli forces are positioning themselves for what military planners expect to be Iran's most significant retaliation yet. The wild card in all of this, according to regional analysts quoted in the Wall Street Journal, is what happens if Iran decides to openly acknowledge what's happening and call for international intervention. So far, Iran has been downplaying the attacks to avoid looking weak, but there are signs that this strategy might be changing. Just yesterday, according to Iran's state media, as reported by Al Jazeera, senior Iranian officials made their strongest statements yet about coordinated international aggression against their country. While they didn't explicitly name the US and Israel, intelligence sources suggest this represents a shift toward more open confrontation. What makes this particularly dangerous, according to conflict analysts at the Brookings Institution, is that once countries start openly acknowledging military actions, it becomes much harder to maintain the kind of controlled escalation that Operation Epic Fury depends on. At that point, domestic political pressures in all countries involved can force leaders to take more dramatic action than they might otherwise prefer. Let me give you a specific example of how this could play out. According to sources cited by NBC News, Iranian leadership is under significant pressure from hardliners within their own government to respond more aggressively to recent attacks. These hardliners, according to regional intelligence sources, are arguing that Iran's measured response so far is being interpreted as weakness by their enemies and allies alike. At the same time, according to sources within Israeli government circles quoted by Channel 12 News, there's pressure within Israel to expand operations even further. Some Israeli officials reportedly believe that this is the best opportunity they'll have to significantly degrade Iranian capabilities, and they're concerned that waiting too long could allow Iran to develop better defenses. Meanwhile, according to sources within the Biden administration cited by CNN, there are growing concerns about the political implications of Operation Epic Fury. With elections approaching, some officials worry that any significant escalation could become a major political issue, especially if American casualties result from Iranian retaliation. But perhaps most significantly, according to intelligence assessments cited by the New York Times, all sides are operating under significant time pressure. U.S. intelligence agencies believe Iran is continuing to advance its missile and nuclear programs despite ongoing attacks. Israeli intelligence suggests that Iran's proxy forces are becoming more sophisticated and better coordinated. And Iranian intelligence appears to believe that the US and Israel are preparing for even more aggressive action. This creates what military strategists call a use it or lose it dynamic, where each side feels pressure to act decisively before the other side gains too much advantage. According to historical analysis published by the RAND Corporation, this kind of dynamic has been a factor in several major conflicts throughout history. So, what should we be watching for in the coming days and weeks? According to multiple intelligence sources, there are several key indicators that could signal a major escalation. First, any Iranian attacks against Israeli civilian targets would likely trigger the third phase of Operation Epic Fury. Second, any Iranian interference with international shipping in the Persian Gulf could bring additional international forces into the conflict. Third, any Iranian withdrawal from international nuclear agreements could provide justification for more aggressive military action. On the flip side, according to diplomatic sources cited by Reuters, there are also several potential off-ramps that could de-escalate the situation. These include Iranian agreement to new restrictions on their missile programs, withdrawal of Iranian forces from Syria and Lebanon, or agreement to new international monitoring of Iranian nuclear facilities. But according to regional experts quoted by Foreign Affairs magazine, the window for diplomatic solutions may be closing rapidly. Each new incident makes it harder for leaders on all sides to back down without appearing weak to their domestic audiences. Let me close with this. What we're witnessing with Operation Epic Fury isn't just another Middle East crisis. According to strategic analysts at multiple think tanks, this represents a fundamental shift in how military power is being projected in the 21st century. We're seeing the integration of cyber warfare, economic pressure, targeted strikes, and information operations in ways that we've never seen before. The success or failure of this approach could influence how conflicts are fought for decades to come. If the US and Israel succeed in significantly degrading Iranian capabilities without triggering broader war, it could become a model for future operations. If it spirals out of control, it could serve as a warning about the dangers of this kind of graduated escalation. What's your take on all of this? Do you think Operation Epic Fury represents a smart, measured response to Iranian aggression, or do you see it as a dangerous escalation that could trigger broader conflict? Let me know in the comments below, and make sure you're subscribed with notifications turned on, because this story is developing rapidly and I'll be bringing you updates as soon as new information becomes available. Also, if you found this analysis helpful, please give this video a thumbs up and share it with anyone who wants to understand what's really happening in the Middle East right now. The mainstream media isn't connecting these dots, so it's up to independent creators like us to get the full story out there. I'll see you in the next video, and remember, stay informed, stay engaged, and never stop asking questions. Thanks for watching. When Bitcoin sells off hard, it often signals that investors are getting scared and pulling money out of risky assets. That selling pressure typically spreads to growth stocks and tech stocks next. So Monday's Bitcoin action could give us an early warning about what's coming for traditional markets. Now, I want to address something important here. Not everyone agrees that we're headed for disaster. IBM's CEO Arvind Krishna told the Times of India that recent stock falls are an overreaction and that the market lacks clarity. He specifically called IBM's 13% stock drop after AI-related concerns excessive and suggested the market is overreacting to AI fears. Krishna makes a good point about deployment versus disruption. He argues that India and other markets are well positioned in the AI race, focusing on practical deployment rather than just hype. This suggests that while AI might disrupt some jobs and industries, it could also create massive productivity gains that boost economic growth. So we have two competing narratives here. The pessimists, led by voices like Jamie Dimon, see AI as potentially triggering a recession through job displacement and market speculation. The optimists, like Krishna, see temporary market overreactions to what will ultimately be positive technological progress. Here's my analysis of what this means for Monday specifically. The market is going to open with traders processing three major sources of uncertainty: Iran tensions affecting oil, AI recession fears affecting tech stocks, and broader concerns about market valuations. In this kind of environment, algorithmic trading can amplify moves in either direction. If we open lower, stop losses could trigger a cascade of selling that pushes major indices down 3 to 5% or more. On the flip side, if oil prices stabilize and there's any positive news on the AI front, we could see a relief rally. The key levels to watch are these. For the S&P 500, if we break below recent support around 4,200, that could trigger technical selling down to 4,000 or lower. For the Nasdaq, breaking below 13,000 would be extremely bearish given how tech-heavy it is and how much AI fears are impacting tech stocks. The Dow, being more value-oriented, might hold up better, but even it could see significant selling if the oil price shock really takes hold. Now let's talk about sectors. Energy stocks could actually benefit from higher oil prices, so companies like ExxonMobil and Chevron might be the only green spots in a sea of red. Defense contractors could also see buying interest if Iran tensions escalate further. On the downside, anything related to AI and growth tech is vulnerable. That means not just Nvidia, but also Microsoft, Google, Amazon, and Tesla. These stocks have been market leaders, so if they fall hard, they'll drag the major indices down with them. Transportation and logistics companies could get hit by a double whammy: higher oil costs squeezing margins, and the Iran situation affecting global shipping routes. Airlines are particularly vulnerable because fuel is such a huge part of their cost structure. Financials present an interesting case. Higher oil prices typically mean higher inflation, which could mean higher interest rates, which is generally good for bank margins. But if we get a broader market crash, loan defaults could spike and offset any benefit from higher rates. Jamie Dimon's warnings suggest he's genuinely concerned about systemic risks. What should you do as an individual investor? First, don't panic. Market crashes, when they happen, create incredible buying opportunities for patient investors. If you have cash on the sidelines, Monday could present some great entry points into quality companies at discounted prices. Second, review your risk tolerance. If you're invested in growth stocks and tech companies, understand that those positions could see significant volatility in the coming weeks. That doesn't necessarily mean you should sell, but make sure you're comfortable with the potential downside. Third, consider defensive positions. If we are entering a period of higher oil prices and market uncertainty, defensive sectors like utilities, consumer staples, and dividend-paying value stocks could outperform. Here's something else to consider. We're seeing increased correlation between different asset classes during crisis periods. Stocks, bonds, crypto, and commodities all tend to move together when investors get really scared. The only things that typically hold value are cash, gold, and sometimes the US dollar. But remember, timing markets is incredibly difficult, even for professionals. The best strategy for most people is to maintain a diversified portfolio and take advantage of market weakness to add to positions in quality companies at lower prices. Looking beyond Monday, there are several key events that could determine whether this is a temporary sell-off or the beginning of something bigger. We need to watch how the Iran situation develops, whether oil prices continue climbing, and most importantly, how tech earnings season plays out. If major tech companies start reporting AI-related disruptions to their business models, or if they guide lower due to economic uncertainty, That could validate the pessimistic AI narrative and lead to further selling. On the other hand, if companies show they're successfully implementing AI to boost productivity and profits, that could calm fears and lead to a market recovery. The Federal Reserve's response will also be crucial. If we get a significant market sell-off combined with spiking oil prices, the Fed faces a difficult choice. Do they cut rates to support markets, risking inflation, or do they stay hawkish and risk a deeper economic slowdown? Here's what I'm watching specifically on Monday morning. First, futures trading Sunday evening will give us a preview of sentiment. If S&P futures are down more than 2%, that suggests serious selling pressure. Second, watch the VIX volatility index. If it spikes above 30, that indicates genuine fear in the market. Above 40 would suggest panic selling. Third, monitor oil prices and the dollar. If crude oil breaks above $85 per barrel and the dollar strengthens significantly, that combination is typically bearish for stocks. Fourth, pay attention to sector rotation. If we see money flowing into defensive sectors and out of growth, that suggests investors are positioning for a longer period of uncertainty. Let me share some historical perspective here. Market crashes, when they happen, tend to be swift and severe, but they're also often followed by strong recoveries. The key is not getting caught up in the emotion of the moment. The 1987 Black Monday crash saw the market fall 22% in a single day, but within 2 years, markets had fully recovered. The 2020 COVID crash was brutal but brief. Even the 2008 financial crisis, which was genuinely systemic, eventually led to one of the longest bull markets in history. So while we need to take these warning signs seriously and prepare for potential volatility, it's also important to maintain perspective. The US economy has tremendous resilience, and innovations like AI, despite short-term disruptions, will likely drive long-term growth. That said, we can't ignore the warning signs. When you have geopolitical tensions, overvalued markets, and major technological disruption all happening simultaneously, the potential for significant market moves increases dramatically. My final thoughts on Monday's market action: expect high volatility, be prepared for big moves in either direction, and remember that market crashes often create the best buying opportunities for long-term investors. If you found this analysis helpful, please hit that like button and let me know in the comments what you think will happen Monday. Are you expecting a crash, a rally, or something in between? I read every comment, and your perspectives help make these videos better. Don't forget to subscribe and hit the notification bell so you don't miss my market updates, especially if Monday turns out to be as volatile as these indicators suggest. And if you want to dive deeper into market analysis and investment strategies, check out the videos I'm linking in the description. Remember, investing involves risk, and nothing in this video constitutes financial advice. Always do your own research and consider consulting with a financial advisor before making investment decisions. Thanks for watching, and I'll see you in the next video where we'll break down whatever craziness Monday brings to the markets. Stay safe out there.